Okay, now we're getting into what I'm working on right now. This is the godfather of the anchor. Don't buy the dip, which everybody hears in investing, buy the dip. Brian will show you many, many charts that if you try to be an investor and buy the dip, you get dipped and smoked. You think a dip is 10%, it's actually going to be 36%. Have fun. Don't buy the dip, don't buy the breakout. Buy the strength after the dip when the anchor from the previous high is taken out. Look at that number. When someone like Brian says that, I take it really seriously. With 100% certainty, buyers are now in control. And you can flip this on the sell side. When we break for a new low, we pull back. The pullback higher is the dip, and then you want to find out where's the strength on the downside when sellers have taken full control. So what does this look like? This is Brian's chart. Here's your anchors here. We break out. Don't buy the breakout. Don't buy the dip. Don't just throw buys in because this could go lower, 116, 115. You buy that candle because that's your structure high. And when that breaks, what did the last slide just say? 100% certainty that that break means buyers have control. So the only question you should ask me, and I know you all are smart, you're going to ask me, what happens if this anchor then is broken? Anybody want to take an intelligent whack at that one?
Close them out.
Say it again, louder.
Close them out.
Close them out. Why?
Because sellers take, well,
Sellers are starting to take back control. Exactly. It's so reactionary. Plenty of examples. Anchor from the start of the day. Today's initial high. Yesterday's high. New York stock market open. The anchor from the New York Open shows us that we're trending higher. New York Open is bullish. We were above anchor before. Pushes for a new high of day. What is this called?
Buy.
Who said that? You're smart as fuck, bro. What is this?
pull that down.
The dip. Throw the purple anchor. So now we're going to use purple to signify high of day, low of day anchor. Blue is New York open. Black is start of day open. Purple is high and low of day. Everybody follow that? Am I buying these A2s? They're below that anchor. So if I want to combine what Brian is saying with our strategy, it's got to get above that. Exactly.
And you only put in the VWAP once you've got the A2s.
No. As soon as you have a high of day, you show up in the morning and you start your trading day, anchors are the most recent high or low.
Yeah.
So again, breakout, dip, strength after the dip. That really doesn't break it. You can see it's just sitting on it. That's a clear break. Now, by taking and waiting for that break, what did you do?
Yeah,
You avoid those B signals, all would be stopped out. If you drew the stop correctly, they all would get stopped out. So you hold this previous high of day zone, which is the blue zone. You break right back above New York Open, anchor VWAP, break above that Asian range high, yesterday's high, and then you take this out. So now the stop goes at structure, because we're assuming higher lows. That's your higher low, and you're looking for 1 arm.
Yeah, that by definition, if the buyers took control, you wouldn't need your stop loss any lower than
No.
last pullback.
No, because if it takes this out to the downside, I should be getting some off. Now this is the trick. This is, I think, the hardest part of this. If you get out here, you got to get back in here. If you get out here, you got to get back. So I'm not quick to get out of these, okay? I give it a little bit of time, and that's why I like to stop at structure. If this would take out this zone and this New York anchor, that's where I'm going to start to piece out. And that's perfect because it's about halfway to my stop loss. So I can start to mitigate that loss. But look at how, if I add here, or I add here, or I add here, I'm making money.
So you just do this just for a moment.
Just on the 1 minute. Yeah. This trade, that's at 0.98 R. It's a 1 R trade right there.
Austin,
Yes.
do you give any of these VWAPs a greater importance than the other? Because I know there's getting online.
Yep.
Like if you were to buy the one off of the blue line,
Yep.
go lower.
Mm-hmm. New York, right now, New York Open is more important than high of day. Anchor from the start of the day is more important than New York Open. Why? Take a guess. Exactly. More time. Exactly. Tells me over a longer period of time, still intraday, who's in control. Exactly it.
And 90% of the time it matches.
Yeah, it matches the
I
same.
took off the beginner open. I only
And then with the high of day one, you don't need the New York. Yeah.
But look at
Yeah.
it's the same.
It's just the same.
So you're still drawing the buys then from the start of the day, which is why on the New York, we weren't looking.
Exactly. So now this one here, This is not a New York Open blue one. I just made this line blue for some reason. This is a high of day anchor, breakout previous. I'm not buying the breakout. That's what these B signals are. B signals here are A2s, right? The flag is the A2. So I'm not buying the breakout. I'm not going to just buy this dip because somebody bought it here and got smoked, right? You can either buy the break here. If you bought this breakout, stop has to go here because there's no structure in between. Everybody see that? Here, strength after the dip, A2 near that anchor. That's where I want. I want that A2 or I want that break. That's what I want. Based on because that's the high of day. Now, this pushes here for a new high of day. You would put a new anchor there. That would come down and that A2 would be slightly underneath that anchor. We got more examples. Are we following a little bit?
Yeah.
It's not that complicated. It's crazy. Sorry, this is that first trade continued. We can see this goes 1.4R. This just got reordered. And then this trade, which is this trade, the first one we looked at, look at that. So here's those, somebody bought these, but because it didn't break that anchor, they lost, and they're like, fuck this fucking shit. If you just waited for the right break with the right stop loss, it's all day. I got more. Orange is anchored VWAP from New York Open, blue is anchored from high of day. Entry on break of anchor VWAPs is what we're looking here. A2 in play is confirmation. I don't take the A2 necessarily because I'm under the high of day and the New York Open anchor. So buyers are not in control yet. Do you make more money if you take that trade? Well, yes, technically your R multiple is better. Yes, because you're buying at a lower price. But what I'm worried about, and I don't have any data to this yet, still guessing a little bit. I don't have that 100% certainty that Brian's talking about. But if I buy there, now that I'm through both of those anchors and I'm above the daily anchor, instant profit. So again, breakout, dip, strength when that anchor is broken. It's fucking amazing. It really, really is.
So really A2 come at key levels. You're not going to take an A2 in midair, but you could use an A2 to take a VWAP. Right?
And a VWAP,
That's showing you continuation. Isn't it?
and a VWAP from a high of day can be considered like a floating key level in intraday. A VWAP is a key level.
Yeah.
On stocks. This is pre-market before 9:30. If you trade stocks with FTMO, you can't trade stocks pre-market anyway. But I bought the data, so you'll see it. At the open, sellers. Buyers tried to take control, they can't. Sellers take control, new low, new low, new low. I throw the anchor here. A2. Could I make more money if I take that A2? Technically, yes, you'll have a better R multiple. But do I know for certainty that sellers are in control? No. But if I cover all this, the first break through that low of day anchor, stop at the A2 stop loss to be really safe, right? Put it above the anchor from the start of the day. I mean, that's, bro.
You do get some you do get some nice A2s off these levels.
Oh, yeah.
As well. Like
Yep.
you can get a break.
I just think this is a higher win rate.
Yeah.
That's all. You can still take that A2.
No, I mean, I've like earlier on this week, like I said, one of the ones I didn't take into it broken because I bought it from London.
Yep.
It broke London VWAP.
Yep.
Came back and gave an A2 on the London VWAP. And I
Yeah,
was
every
like,
second.
that was beautiful.
That's-
That was really nice.
So like what you're gonna see me show you in a second is we get this break,
Yeah.
then you get an A2 right here, and then you
that's
lock that
what I saw
A2.
on the 28th.
That's what Evan's trade was that 2 days ago. Look at this one. Low of day anchor, sellers all morning at the open, A2, A2, A2. Break, instant profit. If you took that first A2, you have to wait 10 minutes, shopping around. If you get in when we know with certainty that sellers are taking control, 43 cents on the stop loss, you made 60 cents per share. This is on Google. Looks just like the last chart I showed you, so I don't even need to repeat it. Everybody getting this? Little chop here. Meta. At the open, buyers tried to run. Sellers said, fuck you. A2. Do I really like that A2? No, it looks so choppy. So wait a second. New low of day, hit an anchor. I don't need that A2. I'll get it on the break. But that's the trade that he's talking about. Breaks the low of day anchor, but it doesn't set a new low in here. See that? So I can still leave that anchor on and trade that A2 right there. Does everybody see that? I love this trade because it doesn't break for the new low, and then it gives me the A2.
That's what SPX did on the 28th.
Yep.
Well, on the London.
Yep.